Check it out. Today I have got Graham, Stephan in studio with me. We're gonna be talking about the market. We're gonna talk about, is it about to blow up? Are we gonna see like crazy 40% drops? There's some crazy data coming out. And I think people are gonna be really interested to see whether we disagree or agree.
One shot, now the future is yours. Go! I'm turning dreams into reality. Yeah. It's one shot, now the future is yours. Go!
Well, this should be interesting today. I'm gonna meet with Graham, and he puts a lot of content out there. I don't agree with all of it, but there's a lot I do agree with. Today should be interesting. Hey guys, where's Graham?
What's up, you guys? It's Graham here. Kris, we're doing a React video. Here you go.
This is Graham in studio?
Yeah.
We're just gonna react to a video?
Yeah.
So check it out. Graham actually recently came up with a video and he said that we are preparing for the largest crash that we've seen in 40 years. And I'm like, I don't know, the crash of 2008, the Great Recession, that financial crisis, that was a pretty big deal. And like, I'm not gonna lie, for a real estate investor, like a crash is like, it's like music to our ears because there's so much opportunity that creates. And so while Graham is not here in studio, I'm gonna be actually dissecting a few of his clips and ultimately gonna figure out whether I agree with the dude or not on, are we headed for like a 40-year all-time worst case market crash or not? Let's find out.
Housing prices have officially hit a tipping point. Month over month, national home prices have declined 0.77%. And even though that doesn't sound like a lot, it's begun to create a substantial shift within the entire housing market, with Goldman Sachs believing that more price drops are likely to come soon to a market near you. All in all, more than 85% of major markets have seen a decline from their peak, with more than a third seeing a decline of at least 1%.
Well, he's not wrong. I mean, he's citing the data, and there's a lot of people right now predicting that we're going to see a softening in the market. I don't know about 39%, that's pretty dramatic, but then again, we've had some markets that have just skyrocketed, right? I mean, you take a look at Idaho, was like one of the top front runners all along that ridge line. It seemed like all against the Rockies, from Phoenix all the way up to Idaho, especially here in the Utah market where I live, prices have just gone up and up and up and up. And we're not talking about like up 10 or 20%. I mean, they were leading the charge out of most other markets on the kind of increases. Do I think there's going to be some type of correction in those markets? Yeah, more than likely. Moody predicts that it's going to be 10 to 20% in 210 out of the 324 markets. And we'll have to see. Right now, Phoenix has already started stepping into a very major correction. But for the most part, around the country, what we're seeing is a slowing of sales. We're shifting into a buyer's market. And there's a lot of panicking sellers that are saying, oh, crap, I thought I was going to be able to sell this thing. This thing isn't selling right now. Let's lower the price. Oh, shoot, that didn't work. Let's lower it again. And so you've got a lot of price lowering. And things are taking more of a normal time to sell in the market. They're not supposed to sell in like 7 days. They're taking now like over a month. We'll see that number go to 2 months, into 3 months, and we're going to see inventory start to stack up in the market.
On the surface, the biggest issue is, no surprise, home affordability. Black Knight mentions that with prices beginning to decline, this last July was one of 10 of the least affordable months in the last 3 decades, with almost 33% of the median household income to purchase the average home. Because of that, they mentioned that it would require some combination of a 30% rise in incomes and a 2 percentage point decline in 30-year rates, or an additional 20% plus pullback in home prices to bring home affordability back in line with long-run averages. Even more surprising is that the monthly payments needed to purchase the average home are still 41% higher from the start of the year and 75% higher since the start of the pandemic.
Yeah, this is actually one of the biggest concerns where we have to see some type of reset is this home affordability issue. I mean, we've got people that are paying $800 to $1,000 more a month than they were on the same house even just a year ago. And so what happens is if the prices go up, your mortgage is going to go up. But if prices go up and people are chasing the market and they're like, well, I think I can afford that, but you have rates go from the Fed from effectively 3%, 2.8, all the way up to 6%. What that's doing to the mortgages is that interest hike is now leading to people paying $800, $900, $1,000 more a month on that exact same mortgage. That's not sustainable. That's not affordable. So the data that Graham is citing here is very, very real. This is an actual problem that is happening everywhere. People are feeling it. And so now what we have is a bunch of inventory. People are like, wait, I don't want that anymore. If we had the the old rates, I would want that, but with the new rates, dude, who can afford that? People can't afford that. So what am I gonna do? Go ask my boss for a 30% raise? Not gonna happen.
That's not gonna happen, Rick. It's not gonna happen.
It's kind of funny though, because there's a difference between a consumer and an investor, right? To the consumer, rates are everything because this makes a difference on whether your payment's hundreds of dollars more or less, and sometimes in a much greater extreme. But to the investor, I mean, I was bred in a market, back in the early 2000s where 6, 7, 8%, this was normal. Like that's just what investment rates were. And guess what? We still had positive cash flow, everything worked, homes appreciated, and it was a great way to make money. So I would say that for the investor, it's honestly not that big of a deal. Think about it this way. When you go into a recession and the Fed increases rates and we're trying to get a handle on inflation, does a part of the population disappear? No, that's really dumb sounding. No, the population is increasing, people are making babies, immigrants are moving into this country. What happens is you have a shift from people not buying and owning homes, but rather renting. So the sector I like to play in is the rental sector. It's now hotter than ever has before, especially because guess what's happening? The rates on rents are actually increasing. They're hiking steady, which means we've got positive cash flow. And that's a part of the market that always makes sense. If prices go up substantially, so do the rents. If the market drops, rents usually don't soften a whole lot, which means that rents just steadily climb and climb and climb. I'll hold a home for 5, 6 years, sell it. My goal is to make $50,000 to $100,000 on every home that I do, and it just becomes a game. How many homes can I own? This is what wealthy people do.
As a result, fewer buyers are able to afford the typical home on the market, leading to more inventory beginning to build up, which, let's be real, is desperately needed. Now, don't get the wrong idea, because inventory is still well below the historic average, but should these conditions persist, they estimate that we would cross the 6-month inventory threshold by December, tipping the market in favor of buyers for the first time in recent years.
I'd actually argue that we're already in a buyer's market. That's what happens when the market softens. That's what happens when you have homes that are listed on the market, but they're actually not moving. The inventory is increasing so much so that right now that market is softening. I'm getting my hands on better deals than I've seen in the last 3 years. Now, because I use a buy and hold strategy, it's worked out fine. I've been able to even compete in some of the most, ruthless markets, the top 5 markets in the country, and we've done well. But right now, we're snagging some of the best deals we've been able to find. I'd say this is a kind of a bad news market for a consumer that is trying to put their family in a home, but it's actually like a dream market for an investor that knows what they're doing. Because that market, it's already here. As far as crossing the threshold, we are missing millions of homes. We are going to be in a buyer's market now, but we're actually stacking a bigger problem because as the market softens, you're gonna have developers that are less eager to develop properties. You're gonna have builders building less houses, and that's gonna contribute to the same problem we've had since 2008. We've been in a catch-up game. We haven't been able to build enough inventory for the demand that's actually out there in the market. We're just like temporarily on hold right now with these really high rates. Theory is that the feds are probably going to keep raising rates through 2023 until they hit 4.6%. You add prime on that, you're going to be sitting at mortgage rates of 7, 7.5, 8%. And if that's that all-time high, that should halt people wanting to buy homes in the market. And from there, if we've successfully been able to lower inflation, that's when the feds will likely start lowering those interest rates back up. That will tell the market, oh my gosh, we've been waiting, we've been on pause, it's go again. Now we want to start getting back in the market. We want to start buying again. And my guess is we're probably going to see a frenzy again, because the frenzy is not a byproduct of inflation or rates. It's a byproduct of how much inventory we're down. Think about it this way. We're missing millions of homes. Before this whole shenanigan thing started with inflation, we were missing more than 5 million homes. If that number continues to increase, but people are going to stay renters because of the cost of a mortgage, what will happen when they start buying again with the lowering of the mortgage? My guess is because we'll now be missing maybe 6 million homes, maybe more, it's going to create that same frenzy. Things are going to spiral out of control, and that's going to set up years down the road for one heck of an epic market fallout where it's going to get ugly and it's going to get nasty.
Nasty!
All right, now in terms of the future of housing prices, even though Black Knight reports on past data, others like Goldman Sachs use that data to then predict what they think will happen in the future. And according to them, they believe that nearly 40% of markets will see a decline throughout 2023. Why, you might ask? Well, they noted that 1 in 5 sellers have already begun to drop their asking prices, with the median price declining from $449,000 at the peak to now just $435,000.
Yeah, I mean, we're seeing a little bit of a drop right now, and the question is, how bad is that going to get next year? 39%, you probably will see that in some cities that grew out of control. Those are massive, massive price drops. And here's the crazy thing. Fed is planning on increasing rates through 2023. So if this is slowing the market and turning it from a seller's to buyer's market, yeah, if they actually keep increasing rates, there's a good chance that for someone who's desperate to now sell the property, or maybe got caught in a flip, or you have a developer that says, uh-oh, I have a string of houses, what are they gonna have to do? Well, the value of what something's worth is what someone's willing to pay. And how much are you gonna have to lower the homes to intrigue someone by these interest rates when for almost a decade we had free money? Like the Fed was charging basically nothing, and we got accustomed to that. A decade is a long time to hang out with basically free money. I mean, think about that, a mortgage at 2.88%. That's nuts, that's crazy, that's almost unheard of. And people, they've got short memories, but long enough to say, can we get back to those? So you've got a whole bunch of people that don't just want to sell, they actually have to sell. They're caught where they were playing the real estate game. How far are they gonna have to drop to get someone to buy with these interest rates? You might see 10%, 20%, 39% correction, probably in some of the really nasty states that saw really high increases. So yeah, is that going to be a crisis of a drop? $1 million homes are gonna feel it, $500,000 homes are gonna feel it. But this is why I buy real estate specifically below the median. $220,000 is my average purchase price. So guess what you have there? American dream real estate that keeps on moving. Now is actually the time to be gobbling up as much of that real estate as possible, because I can already get homes on discount at what next year's drop is projected to be if you play the game in volume the way I do and you actually know what you're doing. What I'm saying is this bodes really well for the investor that is totally counter-cyclical. Like, right, Warren Buffett talks about this. Blood in the streets is great news if you're running in the opposite direction. And right now we've got mounting fear in the market of consumers that are owning real estate, and they're like panicking, what am I gonna do? For an investor, this is when we come in and we play cleanup. By the way, if you are not a subscriber on my channel, I teach you the game of cleanup. I'll even do cleanup for you. You can click my link below and you can learn all about how we can work together as a team and make literally millions of dollars on just helping reset the economy.
So in terms of what this means for you in the market, here's what you need to be made aware of. 1, when sellers can't get the price that they want, they're instead choosing to rent, and this is good news. Throughout the last few years, rental prices have skyrocketed from increased demand and higher inflation, with median rents crossing $2,000 a month for the first time in history. But now with more homes being offered for lease, this should help ease up some inventory and help bring down prices right alongside with it.
This is like the best of all worlds, right? Like reset the market, bring it down. The market is strengthening in terms of rents. If you're a consumer, you might be asking the question, well, Kris, when should I buy real estate? And there's 2 ways to answer that. You either say, well, I don't know, buy now versus next year, and your rate's probably gonna be 1 or 2% lower. And if that's the case, like over the 30-year life of a mortgage, you're probably gonna pay tens of thousands of dollars less. Or you say, I'm just gonna wait 2 or 3 or 4 years. I'm gonna wait for that crash to hit. Then I'm gonna go in on something for my family. You're gonna have to get a low enough price. And then on top of that, I believe you're gonna have to wait and hope that the Fed resets rates and lowers them, which, dude, there's no guarantees that they're actually gonna do that. You think that if we beat inflation, that that's exactly what they would be doing. We're gonna have to see. The government is awful funny these days. But I have to say that for the investor, we've now finally shifted into a really extraordinary timing, because for me, I've successfully invested the last 2 years at one of the most challenging climates with prices on the rise. Now that things are softening there and rents are going up, whoa, this is my season, this is my heyday. And especially think about this. You see markets with a 40% drop, what's gonna happen? Foreclosures that are gonna go in droves back to the banks. The banks, they're not in the business of real estate, just lending on it. So they're gonna clear that inventory out through their REO listings or through an auction process. And back in 2008, we bought thousands of homes on the auction block for like 30 cents on the dollar. 5 years later, market stabilized, sold them at top dollar, made all that money. First 5 years I made my private investors over $100 million just in growth on those properties alone. In fact, I've documented all of that here in what I call Krohn Consortium. This is bringing institutional structure and scale to single family to everyday people like you and I. This document shows how a guy who started off as a mom and pop investor that ended up buying 6,500 homes. How did I do that? What was my strategy? Real estate is probably, in my opinion, the smartest, safest place to make the easiest money grab during a recession for the next 5 years. This document will show you exactly where, how to do it, what strategy to leverage, where to win, what to do, what not to do, and then it'll show you track record on literally thousands of homes to produce the kind of ROIs in this. In this document, if you want it, I'll give you a copy of it for free, ship it in the mail, drop it to you. All you gotta do is click a link below, ask for this, cover the shipping on it, the document itself, full color, will be sent to you in your home so that you can review it. Steal my strategy. Literally, I'm not afraid. Duplicate it, leverage it, and compete in the marketplace and take care of your family. I was financially free by the age of 26. I figured out this, and I've been playing that game ever since. At this point, it's very automated for me. That's not what I do on the day-to-day for the most part anymore. I'm doing different things in the game of real estate, but this is the foundational wealth piece that I leverage. As far as Graham, dude, he's not off. He's looking at the data. He's approaching it, I believe, really intelligently. If you take a look at where we're at in the marketplace right now, we're seeing a softening of the market, even more next year, and it might be 2 or 3 years before the government creeps up on actually lowering rates, which gets the economy moving again. They have to hike it right now if they want to get a hold of inflation, which, gotta be honest, I mean, whether they made the mess or not, it's a smart thing that needs to be done so that our dollars don't have leakage, so that 10% of your savings in a year doesn't go down the drain. That's a horrible thing. So win in the game of real estate. The timing on it is 1,000,000% now. Get a copy of this. Let me show you how to win. Thanks for watching today's video. Got to tell you, timing is not only now, but by the time the recession is over, you could be a millionaire. I did it in less than 5 years. Graham has done it in less than 5 years, and you can join us as long as you play the game the right way. The link's below for how you do that. Now, let's continue with conspiracy theory, right? Let's talk about China. People love to talk about whether China's going to have some impact on the US economy. And right now, there's some crazy things going down in China most people aren't aware of that actually pose a very real threat to our economy right now. And if you want to know what that is, check out this video right here.